All right, so let me do a quick review of the strategy that we are planning to use throughout this trading week. All right. But before we do so, I will do a quick overview of the portfolio or update the portfolio as of June the 20th, 2022. All right. All right, so as you know, we have 5 stocks within the blue colors portfolio. As of June 20th, last trading day, there was mixed results in our portfolio. A couple of stocks increase, and we see a reduction in a couple of stocks. All right, so as for the Mayberry stock, the Mayberry stock inched up just a bit, couple of cents, and as a result, the Mayberry stock has increased some 87% since we have it. All right. SOS, one of our favorite stock, saw a slight fall off in the stock price in the last trading day yesterday. So it fell from $12.30 to $11.53. So the stock is still up some 91% as we speak. JMB, there was a slight uptick in JMB. The last review we did, JMB was up some 11%. Now JMB is up 12%. All right, so there's a slight uptick in JMB's price. JMB is one of our favorite stock. For some reason, we believe that this stock has potential to give us some crazy return. JFP, we're still holding on to a JFP stock. All right, and we'll see where JFP traded up today from $1.50 to $1.63. All right, so the stock currently is giving us a return of 63 cents on our initial investment in the stock. Dollar Financial had the biggest movement today in the portfolio. And we'll see where the stock went from $2.31 since our last review to now $3.06. That's some 32% increase in the stock. All right, as a result, the stock is up 206%. All right. Now, as you know, we have some cash on our in our portfolio, and cash dipped some 51% since we started deploying some of the cash in the new IPOs that were coming out. All right, so cash is down to $48,000, and we're still planning on using up some of those cash. All right, so this is the entire portfolio as we speak. The stock portion of the portfolio is this section of the portfolio. I will see where the stock portion of the portfolio is up some 96% as we speak. All right, so the stock portfolio went from around $300,000 to now $586,000. So that's some 96% return on our stock portfolio. Now, because of the cash balance that we have, all right, and you can see where we started using up some of the cash. We had some quarter of our portfolio in cash waiting to take advantage of some IPO as they come due. All right, and only 2 IPO came due that we were able to invest in. So you can see cash portfolio dipping. Now this over here is our total portfolio return. All right, so the total portfolio return, let us do that in a lighter blue or orange. All right, so you can see the total portfolio return. This is the value of our stock plus the value of the cash. All right, and as a result, the total portfolio is up some 59%. All right, so you can see where the cash in our portfolio is having a drag on our portfolio return. All right, so if we had deployed all of the cash in the stocks that we bought in the same weight that we buy those stocks, we would be up some 96%. But because we have cash on our balance sheet or within the portfolio, we are up 59%, but down from, 59%, yeah, but down from the 96% that we could have experienced without cash. So as a result, this is how we're looking in terms of the graph. And the blue line is the stock portfolio, whereas the gray line is a total value of the portfolio, meaning stock plus cash. And you can see the gray line is constantly above the blue line. But if you look, you can see where the distance between the gray line and the blue line is narrowing. All right, so it is getting narrower. What that means is that we're deploying some of the cash. All right, putting some cash to work. And as we put more cash to work, then the stock portfolio would represent the total portfolio. All right. As you can see, we are running a high risk portfolio. That's a risk profile of the portfolio. And that's why, and that is the reason why we do not recommend that you invest alongside what we are doing, because our portfolio or risk profile is one that is higher of high risk. What that means, we do not diversify our portfolio. All right, so out of the many companies that are listed on the Jamaica Stock Exchange, the junior arm of the Jamaica Stock Exchange, along with the main arm of the Jamaica Stock Exchange, we only own 5 stocks. All right, just 5 stocks in our portfolio. And if you look at how those stocks are weighted within the portfolio, they are highly concentrated. All right, so we are non-diversified and we are highly concentrated, and we are planning on getting even more concentrated within the portfolio. Now, this is how we weighted the portfolio at the beginning of our investment period. All right, this is how the portfolio was weighted. So at the beginning of the period, Mayberry was had some 25% of the portfolio. So 25% of the portfolio was invested in Mayberry. SOS represented 25% also. JMB had 25% of the portfolio, whereas JFP was not in the portfolio at the time. Dollar was not in the portfolio at the time. And we had 25% of the portfolio in cash. Now, what had happened, because of the movements in the stock price, the weights of the portfolio has changed. All right. First and foremost, cash is now just 8% of our portfolio. Reason being, we have deployed some of our cash to invest in JFP and dollar. So JFP now represent 12% of the portfolio. 10% of the portfolio that is coming from nil at the beginning of the investment period. Dollar is now 5% of the portfolio. All right. Now, it is the movements, the stock price, the movements in the stock price of these 2 stocks, why they have taken up that weight in the portfolio. Mayberry, as you can see, has become now 29% of the portfolio. So Mayberry's weight in our portfolio has increased, and that is solely due to the movements of Mayberry stock price. As we saw, the stock was returning some 83%. SOS is now 30% of the portfolio, coming from 25% of the portfolio. And again, it is the movements of these stocks why they are taking up so many or so much part of the portfolio. JMB is now down to 18% of the portfolio, coming from 25% of the portfolio. All right, so the weights as the stock price move, or the stock prices move, where this is what you will experience in your portfolio, the weights of those portfolio changing from what they originally were. All right. So one of the things we want to do now is to rebalance the portfolio. What professional portfolio management tend to do is to rebalance the portfolio back to the original weights. All right. So like, for instance, Mayberry is now 29% of the portfolio, and the original weight was 25%. So what they will do is to sell a portion of their Mayberry shares and reinvest it in a portfolio. Reinvest that in the portfolio so as to balance back the weight. All right, and get Mayberry back to where it is. All right, so our strategy is to first deploy all of the cash that we have on the balance sheet. All right, so at first, we stated that we want some of the cash to stay on the balance sheet so as to take advantage of the IPOs that may fall due. All right, but what we find happening is that the cash is having a drag on our portfolio return. Because the stock market is quite liquid, and we are planning on investing in stocks that are quite liquid. That means we can get in and out of those stocks with ease. What we're planning to do is to use up all of the cash and put those cash to work. Now, in case an IPO fall or release, all right, what we want to do is to just sell off some of our stock to invest in the IPO. All right, so we want to invest in very liquid stocks that we can easily sell so as to accumulate cash to do some IPO investment. All right, so over the coming week or the coming trading week, we want to deploy all of the cash and start putting those cash to work. Our Mayberry stock, Mayberry net book value or NAV is at Mayberry's net asset value, what they call NAV, is at some $18 per share. All right, I will see where Mayberry is selling at some $10, shade above $10 per share. All right, so we believe Mayberry still have some room to grow. All right, Mayberry still have some room to grow. We will not rid ourselves or rid the portfolio of all of the Mayberry shares, but what we want to do is to start to harvest some of those gains that we have gotten out of the Mayberry stock. All right, so we're planning on selling off some of those Mayberry stock to just harvest some of those gains that we got. And we're looking to reinvest those into the JMMB stock. All right, so we are still highly convinced that the JMMB stock can produce the return that we're looking for in the near future. All right, so whereas Mayberry still has room to grow, we think the best thing for the portfolio is to sell off some of those or take the gains, all right, from our Mayberry shares to reinvest in JMMB. SOS has increased to 30% of the portfolio. Again, SOS has delivered some extra SOS has delivered some good results, and we're seeing where the same play can be made with our SOS stock as with the Mayberry stock. However, we believe SOS still has room to grow. In pre-pandemic era, SOS was exporting furniture, all right? And we believe that the company might still have eye on the Caribbean market, all right? And that in itself is room for the company to grow. We see where the other day, SOS has some idle land that it's sold off, all right, for cash. So the company has some amount of cash that it needs to put to use. We see where the company bought some machine, all right, to expand its Seek brand, all right, and that is the production of books and office And that is the aspect of the company that produces school books. All right. So the company is looking to expand in that arm of its business. So there is still room for SOS. We still believe that SOS has a room to grow. And again, we will employ the same strategy like we're doing with the Mayberry share. All right. And that is to harvest some of those gains that we have gotten out of our SOS investment and redeploy those cash to JMB stock. JFP is now 10% of the portfolio. The stock is up some 61%. All right. JFP recently signed a contract with an overseas company, and we want to just hold on to our JFP stock to see how that will play out. All right. Now, we saw an interview with Metro Siaga, and he was talking about expanding overseas or start looking contract from some overseas company. And one of the advantage that he claimed that JFP had in this particular time was the fact that it can ship furniture from Jamaica to California at a cheaper rate, all right, or a cheaper cost than it will take for those companies to purchase furniture from, say, New York, from across America, where they normally get their furniture from. All right, so as gas price increase and stays high, it is advantageous for JFP or for a company in California to purchase furniture from JFP and have those furniture shipped to them from Jamaica than to purchase furniture from across state. All right, so that's one of the advantages that JFP has at this time, and we will continue to monitor that advantage. All right, and continue to monitor the gas price, because the price of fuel has given JFP that advantage, and the company seems to be able or be willing to take advantage of the opportunity. All right, so we will maintain our investment in JFP. We do not think that we will add any more value or buy any more of JFP stock. And then again, if we're getting it at good price, then we will buy more of the stock. But at $1.60, we believe that it is a hold and not a buy. Dollar is currently trading up some 206% above its IPO value. All right. And based on what we're seeing in the market, it seems like dollar still has some more room to grow and expand. All right. So we will be keeping a tap on this one. We will stay put on the dollar stock. All right. So we're not planning to sell off our dollar stock just yet. All right. We want to give it a couple more days to see how the market will respond and how the market will continue to trade the dollar stock. All right, so the strategy for this week is to rebalance our portfolio by selling off some of our Mayberry shares, or harvest some of our Mayberry gains, harvest some of the gains that we got from SOS, redeploy those cash in the JMB stock, because we still believe that the JMB stock has room to grow. All right, so we know the issues there is with the JMB stock, and we are looking for management to do what management needs to do to get that stock price to move where we believe that the stock price can go. All right, so we are looking to use up all of the cash this week, all right, to get into the JMB stock even more. So the company, the portfolio will be a far more concentrated portfolio this time around than it was when we just started out. All right. So that is a strategy that we're looking to deploy throughout this week, trading week. All right. And we will do an update of our portfolio to tell you how well we were able to deploy those strategy and how that strategy has been affecting our portfolio going forward. So until next time, I'll keep it updated.